Shveta Arya, Managing Director at Cummins India, to talk to us about what's worked, what's not worked. Shveta, good afternoon and welcome to the show. My first question coming to you is, in terms of the estimates, the revenue PAT absolutely beat what the street was estimating. There has been a slight miss in terms of where the EBITDA margins are concerned, and what I understand is it's on the back of the product mix change that has happened. If you have to look at the numbers internally, is it in line with what you were expecting, or are there any deviations?
Line with what we were expecting. We were backed by strong domestic demand, and we were able to execute really well. So our power gen segment, industrial segment, aftermarket, in all of those spaces in which we operate in, we were able to execute well along with strong demand. We were able to see positive demand in the export segment as well. So this was in line with our expectations.
That's in the domestic market. How are you looking at the exports? Because the commentary does tell us that there was some bit of uncertainty with regards to global markets. And how soon are you expecting a recovery to come in on that front, and what's the growth expectation?
The export markets continue to be a mixed bag. We provide our products to various markets around the world. And since we operate in so many markets around the world, the geopolitical situation in different markets is different. We have seen positive moves in certain markets. However, with the new tariff changes that are expected to come in, we are now evaluating how they will impact each of these different regions globally. So at this point in time, we are evaluating. It's a wait and watch stage.
And with regards to your outlook on the demand, on the revenue and margin guidance, where does it stand for the fourth quarter as well as for FY26?
For the fourth quarter, for the full financial year this year, we maintain that we will see double-digit growth in our revenue. And for the next financial year, we see positive domestic demand. We see our exports also showing some positive moves, although it is a wait-and-watch situation because of the tariffs. Our endeavor will be to maintain double-digit growth in the next financial year as well.
Okay. And with regards to the pricing dynamics, that is something that the street was watching out for as well on the CPCB 4+ engine market, right? What would you have to add?
We are watching the pricing in the market. All the competition has launched their products. Our product is very well accepted in the market. It's a big technological shift for the market, and our product is being very well received. There's a lot of reliability we have been able to demonstrate. We continue to watch the price. Our belief is that it will take a quarter or two for the pricing to settle in the market because the content for the product has changed, and this is a big technology shift. It will take some time for the price to settle.
And which segment, Shveta, are going to be growth drivers? Because a lot of chatter that's happening that this power generation demand is going to be led from data centers as well, of the big tech majors that are coming up. How big a segment is this going to be from here on?
For our power generation segment, data centers continues to be a demand driver. So does the mission critical power segment, the segment which requires power for applications which are like hospitals and others. So that demand continues. Commercial reality as a segment in the power generation space continues to show steady demand. On the other hand, our industrial market as well, where mining or rail with infrastructure spent in the country, capital expenditure that happens in these spaces, we will continue to see demand.
And what is the kind of outlook with regards to where capacity addition goes?
So the capacity addition for us, we have our projects lined up. We continue to invest in manufacturing capability to upgrade our manufacturing facilities, to get a new technology in our plants. We have scale from where we provide products for the domestic market as well as export. And as I mentioned, we will continue to see domestic demand grow. So to fulfill the demand, as well as to continuously upgrade our manufacturing facility, we have outlaid projects and we will see CapEx coming in for those projects and for helping us fulfill our demand for our consumers.
And what's the kind of CapEx that you're lining up, if you could quantify that for us?
This is mostly sustenance capex for our plants. There are a variety of projects that are getting launched. I won't be able to give you a number, but with a large number of projects that are coming up.
Okay. That we are with the capex aspect of it, Shweta. From the recent budget announcement on the capex plans, do you think the government capex spend that is going to come in is a welcome move according to you? And in tandem to that, do you think private capex will then pick up as well?
So the government has laid out 11.2 lakh crores investment. And we see that is a positive move towards the infrastructure growth that the government has been talking about towards building a Viksit Bharat. We believe that also the push towards clean technology manufacturing, the national manufacturing mission launch, and then the credit guarantees to the MSMEs that have been laid out in the budget. These will bolster demand in the market. So our belief is that it will be positive for boosting domestic demand in the market.
Right. And when you talk about the US policy as well, how big an impact are you expecting in terms of business?
So the US policy and the tariff changes that have been announced globally do impact the supply chain for Cummins Inc. Relatively for Cummins India business, the impact is lesser because our supply chain is largely localized. And we also serve a large variety of segments. So we are, while I say that, the tariff changes, we will have to evaluate the impact because they can lead to higher inflation, they can lead to higher regulatory scrutiny, and that can impact demand as well as margins. On the other hand, it can also be positive for exports out of India. So it needs to be evaluated further. We need to wait and watch. We believe that with a very strong local supply chain, the diverse segments that we serve in domestic markets as well as exports, we will be able to navigate these challenges. The challenges do remain, however.
Right. So, Shweta, my question coming to you is, we're talking about a double-digit growth coming in, at least in terms of this year, as well as that's the ambition for FY26 as well. Take into consideration probably things don't work in our favor, right? Then what's the bare minimum that you could see? Because I think even Cummins Inc. has clearly categorically come out and said that they are projecting total revenue, including the JVs, to increase 10% in 2020 for them itself. So overall, with all the challenges, if they come in, is 10% the bare minimum? And if everything goes well, you could outmaster that number? Or is that a concern? I mean, how are you looking at that 10% number?
Our endeavor is to maintain the double-digit growth outlook. And with the segments in which we operate, the power gen, the industrial, the aftermarket, based on what we see from a demand perspective and the infrastructure spend in the country, we maintain the outlook on double-digit growth.
Right. All right, Shweta. Thank you so much for speaking to us at NDTV Profit. So that's the management of Cummins India, clearly categorically maintaining that endeavor of a 10% double-digit growth that even the global management also indicated with regards to where the India goes. The stock has recovered slightly from the day's lowest levels, but the pressure does continue. Cuts of around 2.8% coming in there.